Okay, so if you're a US taxpayer and you have any kind of financial connection overseas, you really need to listen up. We're about to break down the, let's be honest, pretty complex world of foreign financial reporting. And trust me, getting this wrong can be a very expensive mistake.
So let me just ask you straight up. Do you have a bank account? Maybe some investments? Or maybe you just have signature authority over an account in another country? It seems like a simple question, right? But your answer has some seriously big implications for your US tax filings.
And look, this isn't some obscure rule buried in the fine print. This question is sitting right there on Schedule B of the standard 1040 tax form, the one you see every single year. It asks you point blank about foreign accounts. Checking the wrong box or not filing the right paperwork if you check yes can lead to some massive penalties.
So, to get our heads around all this, here's our game plan. First, we'll talk about the basic idea of reporting worldwide assets. Then, we'll get into the two big ones, the FBR and Form 8938. We'll also cover what happens when you get foreign gifts, and then wrap it all up with the key things you need to remember. All right, let's start with the one core concept that's behind all of these rules. If you're considered a US person for tax purposes, your financial world doesn't just stop at the US border. The government wants a complete picture of your finances, no matter where they are. So, here's the bottom line. US law says you have to report your worldwide income. But, and this is a huge but, it's not just about income. You might have to report a foreign account even as that account earns zero taxable income. That's a detail that trips up a lot of people. Okay, let's get into the first big form, and it's a really important one. It's known as the FBAR. Now, what's interesting is that it comes from the Bank Secrecy Act. See, it's not an IRS rule, it's a banking rule. So let's see what that actually means. This is the number. If you remember just one figure from this section, make it this one, $10,000. This is the magic number that kicks off the most common foreign reporting rule out there. So what's so special about $10,000? Well, it means you have to file a report of foreign bank and financial accounts, the FBAR, if the total value of all your foreign accounts goes over $10,000 at any single moment during the year. And here's the other crucial part. You don't file this with the IRS. You file it with FinCEN, the Financial Crimes Enforcement Network. It's a completely separate filing. Now, you might be thinking, what exactly is a foreign financial account? And the definition is incredibly broad. We're not just talking about your basic checking and savings. We're talking brokerage accounts, commodity accounts, even insurance policies if they have cash value, and foreign mutual funds. They cast a really, really wide net here. Okay, so just when you think you've wrapped your head around the FBR, guess what? There's another totally separate requirement you might need to worry about. It's called Form 8938, and it comes from a whole different law. I think this is a great way to think about it. The FBR is like a wide net, right? That low $10,000 threshold is designed to catch a lot of people. But Form 8938 is more like a microscope. It takes a much deeper look. The filing thresholds are way higher, but the list of things you have to report, what they call specified foreign financial assets, is even broader. It can include things like stock in a foreign company or an interest in a foreign partnership. Just to give you a feel for how different these thresholds are, let's look at an unmarried person living in the US. You'd have to file Form 8938 if your foreign assets top $50,000 on the last day of the year, or if they hit $75,000 at any point during the year. And just so you know, these numbers are even higher for married couples and for people living outside the US. Okay, this is where it gets really confusing for a lot of people, and for good reason. You might have to file one of these forms, or the other, or, and this is the important part, you might have to file both. They are not mutually exclusive. So let's put them side by side and clear this up. This table just breaks it down perfectly. The FBR, that comes from the Bank Secrecy Act. Form 8938, that's from FATCA, the Foreign Account Tax Compliance Act. The thresholds, totally different as you can see. But the most critical difference is that last row. The FBR is a separate filing that goes to FinCEN. Form 8938 is filed with your income tax return to the IRS. Filing one does not satisfy the requirement for the other. Now, it turns out the government isn't just interested in the accounts you own. They also want to know about large chunks of money you might receive from overseas. And that brings us to yet another reporting requirement, Form 3520, which is all about foreign gifts and inheritances. And you guessed it, there's another key number for this section, $100,000. If you get gifts or bequests from a foreign person or a foreign estate, and they add up to more than this in 1 year, you've got a reporting requirement. Now, this is probably the most important thing to hear. Filing this form does not mean you owe tax on that gift. See, it's called an information return, not a tax return. In general, gifts you get from overseas aren't subject to U.S. income tax. The government just wants to know about the transfer. But the penalties for not filing this information return can be really, really steep, so you have to comply.
Whew, okay, I know that was a lot. We've covered different forms, different rules, different agencies. So how do you actually put all this together and figure out what you need to do? Let's make a simple action plan. It really boils down to this straightforward 4-step process. First, just make a list of everything you have overseas. Second, for every single item on that list, figure out what its highest value was in US dollars during the year. Third, add all those highest values together. That's your aggregate total. And finally, take that total and compare it to the $10,000 FBR threshold and the different Form 8938 thresholds. That simple process will tell you exactly what you need to file, if anything.
So we'll leave you with this one question to think about. Given how complicated all of this is and how high the penalties for getting it wrong can be, are you absolutely certain you don't have a foreign reporting requirement? These rules are tricky, so if there's any doubt in your mind at all, talking to a qualified tax professional is always your best bet. Thanks so much for joining us for this explainer.